can hear me because we're live now. I believe you all can hear me. I just need just tell me yes. Don't open your mic. Just tell me yes in the message section. Once I get 1 or 2 responses, then I'm fine. I'm waiting. Admit. If you can hear me, tell me yes. If you can hear me, tell me yes. This is a video I just finished recording for my students in the mentorship class, as I promised.
Yes.
All right. So, as I was saying, I said I believe all of you have, read the PDF. We are all here for a particular reason. Now, I said I'm going to be talking about Confluence. I'm going to be talking about entry and exits, or most probably entry, and talking partially on risk management. I won't be talking fully on risk management because it's not a course for you guys. So I'll be talking partially on risk management, the important ones, and those guys that are still blowing accounts using deriv. I think that will be all for today, just those 3 topics, and then we move to till when market opens. We meet tomorrow, and again, most especially those analysis I sent to the group, all of them came, all of them triggered, all of them are in profits. I think I sent, I try my best to send an analysis a day to the free group, and then I send 3 to 5 analysis in the mentorship group, and I also send calls. Once I enter a trade, I let my student know that okay, I'm entering this trade at this particular time, this and this is why I'm entering, this is the reason I'm entering. I'm doing everything I can to make them better traders, so that they don't just trade and then, or they don't just pay for a mentorship that is whack. I try to give you the best. Okay, so I'm still uploading a video for them. I just finished the video. This is my YouTube channel for those that don't have the link. Trade with World Bank. Okay, somebody's trying to join. Yes, so I'll be going straight to today's meeting, the reason why we are meeting today. Now, there are different type of traders here, there are different type of heads here, there are different type of heads in this place. I'm not speaking with my students, so I don't know what you guys trade, but I know we use other blocks. Now, okay, don't let me go to that. Now, I'll be talking about Confluence, because I'm not going to be talking about my real entry, my real setup here, because there are different type of traders, there are different type of mentality. So I'll be talking about trading Confluence as a whole. Now, this is the forex markets. I'll be teaching you guys like I'm teaching new set of people, because this is a free class, and then I want to be taking you one after the other. This is the forex markets. Now, you are entering the MetaTrader 4, MetaTrader 5 trading view, and you're like, oh, what do I want to do? Which strategy do I use? How do I trade? What can I do to make money in these markets? And then you learn a strategy, and strategy is not working. You're like, man, what's going on? But here today in this free class, I'm going to tell you how to trade Confluence and how to use your normal order blocks to enter the Confluence. You can see I'm already spotting out some reasonable stuffs in this market. Now, in your daily time frame, what do you need? You need to look for the market structure in the daily time frame. Like, okay, I want to enter a buy or a sell. How do I know that I want to enter a buy or a sell? What do? You go to the daily. What is the daily telling you? The daily is telling you that the market is in an overall uptrend, or the daily is telling you that the market is an overall downtrend. Once you spot that, you know that okay, market is in an overall downtrend, then I need to sell for today. I want to sell this pair for today. And if the market is in an overall up, you want to buy. I believe you all know that. Now, what is the analysis? Now, okay, you found the trade, you found the structure. Now, what's the structure? Uptrend or downtrend? Now, look at it. It is in an uptrend for a while. You can see. Let's use the trend lines. I don't use trend lines, but this is a free group. So I have to, and I'm trading Confluence with you guys. So I'm going to be doing everything that will help you. Now this is Confluence trading. This is a nice uptrend, you can see now. But what is going on here is that, look at this trend line, it has deceived us. I'm coming. It has deceived us, but now, because the market has violated our uptrend, market is now trying to move in a downtrend, but you can still buy at this point because we have Confluence there also. There's a demand zone here. You can see a demand zone. I just finished explaining what a demand and supply is to my students in mentorship in the previous video I dropped. You can see demand zone. There's difference between demand and supply, and there's difference between support and resistance. So there's difference between demand and support, resistance and supply. Now look at this demand zone here. You are expecting a buy at that point. Look at the trend line also. It is touching that same zone, giving us what? Nice Confluence. You know that, okay, we want to buy at that point. But now this market is in a downtrend. Why? Why is it in a downtrend? Because market has violated our, this is the higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then what should market do again? Continue with that sequence, right? Higher high, higher low, higher low, higher high, higher high, till we have equal highs, something like this. You can see that this market has given us equal highs at this point. Then we know that, okay, this market is no longer trying to buy. You can see this market is no longer trying to buy at all. It started selling, and the point of selling is giving us equal highs, then the lower low, lower high, lower low, lower high, lower low. Now this lower low is what gave us the confidence here to buy. You can also buy low. You know, once you buy low, sell high. So you can buy at the lower low. It's still in the downtrend though, but you can buy at the lower low. Nothing spoiled, no strings attached, nothing else. Now this is the lower low, then lower high. We want to sell again at the lower high. We want to buy, we want to sell high because market has started swinging towards the downside. Now this is the 4 hours time frame. Now that we've gotten the market structure, okay, we're like, okay, what do we want to do? We want to what? We want to sell. We want to sell. Market is giving us nice structures. We want to sell. I'm not looking at this point of interest yet. I was looking at this. I took this. One of my students took this sell at this point. He used Wyckoff to enter because I sent the analysis to the group. It caused the sell. I think it took its profit at this point. Very, very nice. Now I won't be explaining OB as a whole here, because this is a free class. We have different mind, different traders, different mentalities. So I'll be trading pure Confluence. Now we want to sell, but as ICT traders, we know that we want to enter with what? We want to enter with ICT. Now look at these markets. We know that if this market breaks this trend line, then we look for more sell opportunities. If the market breaks the trend line, we look for more sell opportunities. Now, but please mute your mic. As ICT traders, we know that we want to we're looking for other blocks, mitigation, and so on and so forth. Break of structure. That's the break of structure. This is our point of interest. This is the other block here. Now, taking a look at this, as ICT traders, we know that what does the market do at resistance? Market sells as at resistance, but as ICT traders, we don't want to enter with the majority, right? We want to enter with banks, because when you trade the majority, the trade most of the time always goes against them. Now, look what's happening here already. Now that you've seen your nice resistance on the 4 hour time frame, you know that markets will sell at resistance for sure. This is the resistance. Market will sell at resistance for sure. But as an ICT trader, you have idea of what we call liquidity grab. You know that once the market is trying to sell and there's a lot of traders, markets will surely grab liquidity on them and then go against them, hit their stop loss and move in their direction. So why would you want to trade the majority, when you know that market makers are going to trade against the majority. So all you need to do is just look for an order block above your liquidity zone, right? Look for another block above the liquidity zone, trade the entry with the other block, and then you move, something like this. You can see market has started selling, and then using other blocks to enter, you know that okay, I've entered the sell at this point. Let's say I'm here and my target is here. Now let me show you how to trade Confluence. Your TP is going to be where? Next support area. Let's just say you want to swing, your TP is going to be here. Your entry is here from this point of mitigation. From this point of mitigation to the point of what's next support zone. Now this is what we call Confluence trading. For those that don't know about ICT, because I know that not everybody in the group will actually know about ICT, and if you know, then kudos. But I'm talking about Confluence here now. Once you've entered with your ICT, fine. This trend line, breakout of trend line means what? A breakout of a change in the trend direction. This trend line is giving us a nice uptrend here, but you can enter at this point. After you've entered here, that's your first entry. You can see this is a nice support here. This is a nice support here again. This is a demand zone now. That's a demand zone. We'll take questions after the class for those that might want to ask questions. So that's another demand zone again. Now you can see we already have. You are not seeing me, the screen is frozen. Can you see me now? Because I'm on MetaTrader, I'm on trading view. If you can see my trading view, let me know. Okay, thanks. Now you've entered. Okay, you've entered with your order block as an ICT trader. What do you want to do here? Breakout of trend line. What do you want to do? You want to what? You want to keep selling, right? That's how to swing. You want to keep looking for entries. Now look at this point. This is a point of resistance. This is a support here already. You can see resistance has turned to what? Support retests. This is a support zone. Now once markets breaks this for card CHF, if this analysis play out, once you get your entry, if you can't find your entry at this other block here, wait for it to break this trend line, hit this support zone. You can see this support here. Wait for it to hit, buy back to this rewards trend line, to retest the trend line and to retest this nice support area. You can see now. You can see. Then you sell. You can wait here. It might try to buy again. They'll sell to this point again. They'll still buy. They'll grab liquidity. They'll come up here. They'll keep selling. Just keep entering at the breakouts and retests till you get to your take profit zone. That is how to swing. You can see. Starting from here. Now, in the process of entering, then you can now use what we call order blocks to enter. That okay, I'm an ICT trader. The market would have created some candlesticks here, right? Market would have created some candlesticks here. You can look for an order block at this point because this is an impulsive move. This is an impulsive move. There might be another block here, and then you take your entry there. You can see how we are mixing Confluence with other blocks now. Not just entering the market blindly. Not just entering markets like normal retail traders. Enter with other block, get your sniper entry. In the process of entering here, we got your other block. You want to enter at this point again. Okay, this market has given us impulsive move. This is a break of structure. Then you can there might be another block here again. That will be your second entry, and then you are fine. Entering there, you are fine. Let me label it so you won't get confused. BOS. This is a break of structure here. This is a break of structure here because there's a support here. There's going to be a break of structure if it breaks this trend line. So a break of structure is going to be definitely there. BOS. Imagine. So once you get break of structure, you can add more entries. You get your order block around the zone. It might mitigate here anywhere, and this is just an analysis. You can see for those that are using trend line, you know, there are different traders in this place. So some people use trend line, some people use whatever. You know, once it breaks the trend line, then wait for the support. This is a support here. They might want to grab liquidity at this point. No problem. Wait for them to grab liquidity, and then once they grab liquidity, they will mitigate an order block again at this point, because there's already a break of structure here. There's already a break of structure here. Grab liquidity, enter again, queue them, and then you might not want to enter again since you've gotten 2 entries, and most of you might not know how to manage risk or manage trades, and then you are fine. That is pure Confluence using order blocks. The video is not coming out. I'm just listening to audio. Pin. I'm coming. Some people are complaining in the group. Pin my screen. Yes, I've started. Okay, so let's move to another pair. That's pure Confluence for you. That is how to trade Confluence. If you are not trading, if you still don't know how to trade order block or order blocks, you can see nice Confluence, and you hit your TP nicely. Let's look for another pair. Just pure Confluence. We are trading everything all together. I'm trading everything all together because we have different sort of traders here. Please mute your mic. Yes, so this is hero card. What do you want to do again? You want to enter. Let me delete my beauties. Hero card. We did the most on hero card in the mentorship group. Let's check the analysis. Nice stuff. You see, nice mitigation. This was queued in the mentorship. I sent this analysis to the free group. Yeah, I remember. I sent it to the free group. For those that didn't trade this, well, no wala. I'll keep doing my best, as usual. So we queued it. Let's deal with Confluence here because I'm dealing with different type of traders. Now the market is ranging. What do you do in the ranging markets? You either buy or sell, whatever the markets will be. So you're looking for either a buy opportunity or a sell opportunity. Let's move to the 4 hours time frame. 9:23. Okay, I said I'm going to explain Confluence and order block entry. So I've explained order block entry now. But you still need to know more about order block entry using the smaller time frames. Maybe I'll explain a little bit here. So you can draw your trend line. Very useful tool. Some people can add Fibonacci. No wala. Let me put my trend line there. No second touch. Though this is where the trend line is meant to be actually. Yes, that's where the trend line is meant to be. Let's go to the 1 hour time frame. Let me delete what I have. Let me delete them. Okay, let me delete my analysis. Okay, this is a nice support. Good. Market is buying at support currently. It has retested our trend line. I'm not really a fan of trend line. I'm only using this because this is a free class. What do we have? We have resistance. We can go down to 30 minutes. I only use Wyckoff for 30 minutes time frame. My students know this. Just Wyckoff for 30 minutes time frame, and then different stuffs. You can see this is pure Confluence trading. Bringing everything all together and then using order block to enter. You can see. So what are we expecting on EuroCAD as a Confluence trader? I'll be waiting for a nice breakout of this support and then a retest since we've broken our trend line. Nothing much on that. I'll be explaining one more pair and I'll move to the next one, which is the risk management aspect. Oh, I think people are just joining again because of the link I sent again. No problem about that. AUD card. I think there's a crazy pair. Is it this? No, not this. It's AUD USD. Yes, look at this beautiful order block. Mitigated it during the weekly time frame. I didn't quickly see it. I was still targeting Wyckoff for that because Wyckoff actually uploaded there. So normally about my entries on Wyckoff, I'm explaining the way I am entering on Wyckoff is not the way I explained it in the PDF. So the one in the PDF is a bit is a bit late entry, So me and my students, we always modify things a lot. We always look for how to enter. You can see, and then in the 1 hour time frame, it gave us nice Wyckoff schematics. Yeah, you can see we even bought here. See crazy move to the upside. So trading Confluence, nothing much. This is market trend. The market is trending down, but you can see it has given us strong impulsive move to the upside. What do we need to do? Just wait for let me use 4 hours. You see, those that are trading breakout and retests, they will have gotten killed at this point. So that's why those strategies don't really work for me. 1 hour time frame, you can just use your trend line to identify when this trend is going to end. You can see. So once you get a nice break of structure, you know that okay, this market wants to what? It wants to start selling. And then let me give you what you'll be looking for during the sell. Join. Yeah, you can see here. Yup. Alright. So once we get a break of trend line here, once the market breaks the trend, what are you looking for? You are looking for sell opportunities. Down to this point, you can buy here. Sorry about that. Okay. Yup. You can wait for a buy position, maybe retesting the trend line, probably. In the progress, you'll be looking for other blocks to use to enter the market. The other block might be here because market makers might not want to enter exactly at the retest. So at the retest will be somewhere here at the other block. Another block might be there. So you keep looking for your sell entries like that. That's the way to trade as an ICT trader once you are using Confluence. When you are using Confluence, you just need to do your normal analysis, run your normal analysis, and use other blocks to enter. So simple. And then you'll be taking your entries on either the 5 minutes time frame and the 15 minutes time frame. So I think that will be all for now. That's where I'm going to be stopping. Now, I'll be talking about risk management and those blowing accounts. Now, with my ebook, that ebook is actually simplified trading. Simplified trading. Now, I'll be stopping soon. That ebook is actually simplified trading. Okay, my video is uploaded for my students. Forex made easy, right? Now, the only thing making Forex difficult is you. Is you yourself. Is you. You are like, you are seeing Instagram traders, you are seeing YouTube traders, you are seeing everybody. They are trading crazily. DJ Coach is using 800 lot size, 1000 lot size, stuffs like that. So the only thing making Forex difficult is you and your psychology. You and your psychology. That's why we have risk management. I'll stop there. I won't talk about too much on those blowing accounts. Now, if you are still blowing accounts, that's because you want to blow the accounts. Now, you have a good strategy. I've given you at least one of the best strategies. If your strategy is 60% accurate in these markets, trust me, you are very, very fine. The rest is risk management. Risk management is key. That's why those trading volatility index and they are still blowing accounts. I always advise my students to trade currency pairs, because once you are trading currency pairs, you can calculate your stop loss. You know that, okay, my stop loss is 10 pips and I'm using 0.1. It means I'm losing what? Just $10. But now, once you are trading volatility in this index, there's nothing like that. There's nothing like that you are risking your money. You are risking. You have risk management. There's nothing like risk management, because those guys are heavy and they specifically designed VIX to blow people's accounts. I won't talk about much on volatility. I won't talk about derivative agents now. Because I'll be talking about them with my students. There are some informations that we have that are very, very sensitive. I want to talk much about derivative. I won't talk much about derivative. Now, if you are trading derivative, know that there's no risk. There's nothing like risk management. Even if you are using a stop loss, there's nothing like risk management. There is nothing like risk management. Even if you are using a stop loss, that's why I always advise people trade currency pair. Once you are trading 10 pips, you know that once you are entering at 0.91, your SL is going to be at 0.92 if you are taking a sell. And if you are taking a buy, if you enter it at 0.91, you know that your SL is going to be at 0.90. Very calculatable. If you are using one lot, you are trading 10 pips SL, it means you are losing $100. If you are trading 0.1 lot size and are using 10 pips, it means you are losing $10. If you are trading 0.01 and are using 10 pips, it means you are losing $1. So simple. That's risk management for you. But people will still trade with derivative and say, no, I want to trade derivative. Keep blowing accounts just because, not like the strategy is not good. There's no risk management. Now, let me explain something. This is a $50 account. You are using on a $50 account. Do you know that you can use 0.1? You can use 0.10. Now, some people still go ahead. They're not going to use that same 0.10. Their stop loss will now be here. Their stop loss will be 50 pips, and you expect them not to blow the accounts. Imagine, they'll surely blow the accounts. But me, as a Wyckoff trader, I'm using 5 pips SL. Imagine, and I'm using 0.1. If I lose, how many dollars am I losing? I'm losing just $5 on a $50 account using 0.1. And if I'm taking profits, let's be realistic here. If I'm taking profits, okay, I'm taking profit of 71 pips. Okay, let's use 50 pips. 50 pips. I'm taking profit of 50 pips, and I'm using 0.1 on a $50 account. Account is doubled. 0.1. I'm taking 50 pips TP. That's what account is doubled immediately if I hit TP. That is what we call risk management. 0.1 on a $50 account, because I'm using 5 pips SL. 5 pips SL. Even if I'm using 10 pips SL, I know that, okay, with this 10 pips SL, I'm using 0.1 on this $50 account. What does that mean? It means I'm going to lose just 5 times. It means I'm going to take 5 trades and then I'm going to lose 5 times to blow the $50 account. That is how to risk your money. You are planning, you are calculating everything you are doing with your money, not that you just deposit to VIX and then your stop losses will be as tight as this using the smallest lot size, and you still be losing $13 on one trade on a $50 account. Imagine. So why are you still trading volatility index and you're blowing the account? You now come to my DM, you'll be crying. Why? Why? Can you see that you are the enemy of yourself in these markets? Because you have the strategies. Please mute yourself. You have the most simplest strategies ever. All you need to do is just your psychology. You just need to change your thinking faculty and psychology to what? To grow your accounts. That's just what I have to say for you today. Tomorrow or next week, I'm going to teach my students specifically how to manage trades, how to manage risk. Yeah, very, very important. Very, very important. So if you have any questions, let me know. Let me know. I'll be taking questions now. You have the recording. Don't worry, you have the recording. I'm recording now. Oh no, this man is just joining. He has missed a lot. But if you watch the recording, how many minutes have we used? We've used 30 minutes already. I think I'll be stopping there. Any questions? Any questions? I'm waiting. I'll wait for 3 minutes. If there is no question, then I'll meet you. I'll see you later. Okay, this is
Hello?
Yes, I'm with you.
Yeah, good evening, sir.
Yeah, good evening.
Please, I've actually missed a lot. I don't actually understand the Wyckoff strategy, how you use it with your OB. Is there a way I could get a material for that?
Oh, for the Wyckoff, I didn't explain Wyckoff today, but I have a PDF on that, and that's the only thing I'm going to give you. So you can rewatch this video to check on references I made about Wyckoff.
Okay.
Yeah. Any other person, any question, please?
Okay, thank you.
If you don't have any question, I'm going to okay, let's wait till 9:40. Okay, the OB on 5 minutes time frame. I will explain using illustration, or let me use normal entry. Let me use the markets. Now let's say you want to enter an OB here. Nice USD JPY. I love what I'm seeing here. I love what I'm seeing on UJ. Okay, let's say we want to enter here. This nice order block here. What do? We enter the 5 minutes time frame, right? Wait for the markets to mitigate this order block. So in the process of coming down, now what has happened? Now what has happened here? This is the mitigation, right? Let's assume that this blue line is the candles. Now this is the mitigation. We are waiting for entry on 5 minutes time frame. Now we are using order blocks to enter with order blocks. So on the 5 minute time frame also, you are looking for what? A break of structure and an order block, just like we did in the bigger time frame on the 4-hour time frame. So we have a nice BOS here, break of structure. That was what you are going to be looking for on the 5 minutes time frame. We have to wait for a breakout of a structure. So once you see a breakout of structure, then you look for a candle that caused a candle, which is the order block, that caused the impulsive move before the break of structure. So this is going to be your entry on the 5 minutes time frame. You are going to be entering on the order block, which is the candle that caused the impulsive move, the candle before the impulsive move that broke the structure. Then that will be your entry. So this is where you're going to be entering, and then you're going to be using a retail price. Now the price there is 109.927. So you'll be entering at a wholesale price. So you'll be entering at 109.930. 930. That's going to be your entry. Those are the psychological numbers. 930. Then you set your pending orders on the candle that the opening of the candle that caused the impulsive move. Then you set your pending orders. You set your SL, and then you set your TP. you can see 7 pips SL, imagine, and my SL is normally is going to be here 5 pips SL. So tell me why I'm not going to use a bigger lot size on this, even when I know that if I lose on bigger lot size, it's still going to be very, very small amount of cash, and when I win, it's going to be a very big amount of cash. So risk management, if you're my student and you're in this call, just wait for me next week or this week, get video on risk management. Do you apply correlation in OB? Well, correlation, that's why I don't trade a lot of pairs, because these pairs, they correlate a lot. So I just trade the normal pairs that don't correlate, because it won't be wise to analyze on AUD USD and analyze on which pair correlates with AUD USD now. Is it not oil? Then I should be taking a buy on oil and taking a buy on AUD USD. It doesn't make sense. So just take a single buy on AUD USD or take a single buy on oil and then let it move, instead of trading and disturbing yourself analyzing the two pairs. Just stressful. So I don't really trade correlation because it doesn't make sense. I only use correlation for news. So I believe I've answered that. Any other person? Any question? I think I'll stop recording.